We're talking life, money, and confident finance with Amanda Redman of Amanda Redman Financial Planning. And today, Amanda, we're talking about school fees.
Yeah.
Everybody wants the best in life for their children if they can. And some people are in the fortunate position where they decide that they can afford to actually pay the school fees. But no matter how much money you've got, there's an awful lot of money involved in putting children through private school, isn't there? So, well, let's start with that first of all. How much money could we potentially be looking at?
Yes, it does depend where exactly you live in the country, but typically the cost of a prep school is about £10,000 to £15,000 a year, and the cost of a senior school, and if it's a boarding school, can go up to £50,000 a year. So there is a reality if you want to support your child through private school from nursery all the way through to age 18, it can cost about £300,000 in total. It's a lot of money.
It's a lot of money, isn't
Yeah.
it? That you've got to properly plan on how you're going to do that. So, when really should you start thinking about school fees if you're thinking about putting your children through the private education system?
Yeah. Well, some people have a very clear goal for this and will actually start planning for it even before their child is born. But certainly, as with most things, with regards to financial planning, the sooner you start putting something in place, the better. So, for example, if you were to start saving or investing £500 a month from the day your child is born, then if that investment is able to deliver an average return of 5% a year, then by the time they are 11 and going to secondary school, you could have accumulated £88,000, which could actually fund a lot of those school fees at the senior school age.
Okay, 5% is still quite a decent return though, isn't it? If you could find a savings account that paid you just 5% these days, you'd be doing very well indeed. So, bearing that in mind, how would you actually look to turn that money that you're putting away each month into a sizable sum?
Yeah, and so unfortunately the days of bank interest rates of 5% and above are long gone. As we know, interest rates are incredibly low, the longest and lowest points in history, and they will continue to be very low. So that means that you do have to take a step to invest the money so that it can achieve a higher level of return. And obviously with any investment comes risk. And that's where it is always a good idea to work with an advisor who can talk to you about what level of risk is appropriate and therefore what level of returns you are likely to achieve. And as with all investments, values can go down as well as up. So it's good to have a plan and somebody to advise you through moments such as we saw with coronavirus in 2020, where values can dip sharply. The role of an advisor is to stop you making the wrong decisions as much as it is to help you make the right decisions. And investments can be complex if you're not used to them. And a good investment will not only invest in stocks and shares or equities, but will also be diversified across other asset classes, lower risk bonds, alternatives, commercial property, and also diversified geographically so that we don't just invest in our domestic market.
And that 5% return you're talking about, that's realistic?
It can be, yes. A medium risk portfolio of funds invested in a tax efficient way. So for example, using a stocks and shares ISA allowance so that you're not paying any tax on the growth, can deliver those sorts of returns. But again, with investments, nothing is guaranteed, which is why it's really important to work it through with an advisor.
Now, you mentioned the phrase tax efficiency there. School fees, they're not actually tax deductible, are they?
No, so you have to pay school fees from your own income or savings, and obviously our incomes are already taxed by the time we receive them. So there are no obvious mechanisms there to make school fees in particular any more tax efficient. But the way to achieve the best financial outcome or the best returns is to make sure that we're using all of the tax-free exemptions that we have, such as the ISA allowance that I've just mentioned. So we all have an ISA allowance of £20,000 per person. So if you're a married couple, you can shelter £40,000 of investment per tax year that can all be invested to grow.
And is there a role for grandparents in potentially helping out with school fees and using a bit of financial planning?
Yes, definitely. That's something that I discuss with clients quite a lot now. As we're all living longer, it's more of a challenge as to how best to pass on our wealth tax efficiently. And so we do work with many generations within our client families to achieve outcomes that work for all generations within the family. So grandparents, for example, if they do have excess income and they want to gift that money in order to pay for their grandchildren's school fees, that can be a benefit to them from an inheritance tax planning point of view, as well as obviously being a huge help to the parents and children to help them afford to send the children to private school.
Lovely. Amanda, thank you. Lots of food for thought there. And if you would like to have a conversation with Amanda about your personal financial situation, then you can always call for a no obligation initial conversation with Amanda, or of course you can always just look on the website.